Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Friday the 3rd of June. Starting off with Bearwell Mining, which looks as though it's starting to be back in business on the bull tack. Of course, the story here was that we had the Golden Cross last August versus around 2.5 pence, and we have actually been winning versus that signal. The current situation is that we had a crossover down at the 50-day moving average through the 200-day line, but actually 200-day line still rising. And in fact, we can see the share price rebounding after that, and that can actually be a bona fide buy signal. Also, break of this resistance line from February a week or so ago, so that is another positive. And then the strong rebound, RSI rebound of this March uptrend line, a leading indicator on a new leg to the upside, or a possible one. So the initial target here to fill the gap, February gap up to 6p, and then after that, over next 2-3 months, as high as 9 pence. Stop loss, the obvious one, back below 3.5 pence for now. Next up, stock which has been, if I can get the UK version, has been a decent speculative situation over recent weeks and months. It's Capex. What we'll see here is the way that we had the full storm move through the 200-day moving average in March. Second time lucky, looks rather more convincing that this could be sustained, especially after yesterday's sharp rebound for the stock off the still falling 200-day moving average. Rebound off or a clearance of the falling 200-day line can be very positive indeed. This makes it look like a bull flag. We've also had a rebound off this extended RSI uptrend line from December, another plus point, and then you've got the way that since the break above the 50-day line in February, the 50-day line itself has come in as support on several occasions. Target here, while we're above the 50-day line at 4.36 pence, as high as 8.5 pence, which is the top of a rising October price channel. Cloud Tag is next, and we've been following this over recent weeks. Still looking good in the sense that we've got this mid-move consolidation here around the 5 pence level. At least 6.5 on offer, which would be the top of this rising trend channel drawn from April last year. And in fact, if one is more optimistic, it could be the case that this really is not a mid-move consolidation, but an early move consolidation. We hit as high as 9 pence later in the summer or going into the autumn. So all to play for there, and really only back below 4 pence would even begin to question the buy argument at Cloud Tag. Colam Africa is next, and this has been a slow but increasingly positive situation. Obviously the pain here was the decline from that initial May peak, but we've got this wonderful U-shaped recovery above at and above the 200-day moving average at 2.76 pence. Break of that neckline there at 4 pence, holding above that especially should easily retest 5.5 pence last month's resistance, and the overall target here, while we're above the 10-day moving average, currently around 3.4 pence, would be as high as the line I'm about to draw in a second, which is from July last year, heading towards 8 pence, and that would be achievable over the next 2 to 3 months. RSI support there as well from as long ago as February, multi-tested, so that does suggest we've got a really sustained or sustainable turnaround situation here. Kibo Mining next, and here the stock is sort of slightly similar, in fact, to Cloud Tag, in the sense we had this peak to start May, right back down again, but using the 50-day moving average at 4.09 pence as a support, and then a U-shaped recovery back above 5 pence. The view at the moment is that while there's no break back below the 200-day moving average at let's say 4.5 pence, the shares should head towards the top of a rising trend channel from August last year, as high as 7 pence over the next 4 to 6 weeks. RSI support here as well, especially over the course of May with that triple test that we had, so looking quite positive. Probably also in the run-up to a Golden Cross buy signal between the 50-day and 200-day moving averages. Next stock is Onsema Ventures, stock which was flagged by a good friend of mine on the Twitter, one of the Twitterati. He's he's got a situation where the shares have effectively set to triple from their floor in February. This looks like the last main push to the upside here. Bull flag breakout through 1 pence, and while we're above that target here, 1.5, 1.6 pence, which is the top of this October price channel. In fact, one could stretch the target a little bit further towards 1.8 pence if one is an optimist on the stock, which at the moment it looks like many people are. Finishing off with Sula Iron and Gold, which finally looks like it's breaking out of the that extended triangle which has been in place since November. We've had a break through RSI 50. We've had a break through the 50-day moving average as well, around the what's that, 0.19 pence level, and initial target here towards 0.25 pence. After that, as high as the 200-day moving average at 0.31 pence, and only back below 0.17. Really questioning the breakout scenario here. Could be quite a decent move given the way that we've been so confined over the recent month or so. That can deliver a coiled spring effect, and one would hope that that is the case, especially while the RSI remains above neutral 50 versus 57 at the moment. That's it from me. More updates at the same time on Monday.